The year is 2018. The global economy hums along, seemingly stable and predictable, but a storm is brewing. The United States, led by President Donald Trump, takes aim at China, its economic rival. The opening salvo? Tariffs, those hefty taxes on imported goods. Trump slaps a 25% tariff on steel and aluminum, sending shockwaves through the global market. China, not one to back down, counters with tariffs of its own. A tit-for-tat trade war ensues, leaving businesses and investors reeling. The carefully crafted global trade network, built on decades of cooperation, begins to unravel. The stakes couldn't be higher. The initial impact of the tariffs is immediate and far-reaching. Stock markets shudder and convulse. The Dow Jones Industrial Average plunges. Investors scramble to reassess their portfolios. The technology sector, heavily reliant on global supply chains, feels the brunt. Companies like Apple face a dilemma: absorb costs or pass them on to consumers. Meanwhile, American consumers begin to feel the pinch as prices of everyday goods creep upward. Inflation rears its ugly head, eroding purchasing power. The trade war becomes a tangible reality for ordinary Americans. As traditional markets reel, a glimmer of hope emerges from an unexpected quarter: cryptocurrencies. Bitcoin, the enigmatic digital currency, begins to shine. While stock markets tumble, Bitcoin remains remarkably stable, even showing signs of growth. Investors, seeking refuge from volatility, take notice. Bitcoin's decentralized nature, free from government control, suddenly seems incredibly appealing. The trade war inadvertently paves the way for the rise of cryptocurrencies. The technology sector finds itself squarely in the trade war's crosshairs. Global supply chains begin to fray at the edges. Tariffs disrupt the flow of goods and materials, sending shockwaves through the tech industry. Companies like Apple face a critical dilemma: absorb costs or risk alienating customers. Semiconductors become a focal point, with the global chip shortage exacerbated by escalating tensions. The trade war exposes the vulnerability of global supply chains. The semiconductor chip shortage quickly escalates into a full-blown global crisis. Automakers, from Detroit to Tokyo, halt production lines as the chip shortage chokes off supply. The sight of empty dealerships and long waiting lists for new cars becomes a stark symbol of the crisis. Medical device manufacturers face delays while consumer electronics giants struggle to meet demand. Governments scramble to address the crisis, investing billions in domestic chip production. The chip shortage underscores the need for resilience and diversification in the global economy. The S&P 500 begins to show signs of strain. As the trade war escalates, investor confidence wanes. The technology sector, heavily weighted in the S&P 500, feels the brunt of the downturn. Giants like Apple, Microsoft, and Amazon see their share prices fluctuate wildly. Investors grow increasingly cautious, reminded of the interconnectedness of the global economy. The fear of a bear market sends shivers down the spines of even the most seasoned investors. The S&P 500 becomes a barometer of global economic health. As the trade war rages on, investors seek refuge in traditional safe haven assets, gold and bonds. Gold sees its price surge as investors flock to its perceived safety. Bonds, particularly government bonds, also experience increased demand. Investors pour money into bonds, driving up prices and pushing down yields. The flight to safety reflects a broader trend of risk aversion in the market. Gold and bonds become the go-to choices for investors seeking to weather the storm. This shift towards safe haven assets has implications for the broader economy. China plays a new card currency devaluation. In August 2019, the People's Bank of China allows the yuan to weaken past 7 yuan to the US dollar. This move sends shockwaves through global markets. A weaker yuan makes Chinese exports cheaper, offsetting the impact of US tariffs. However, this move risks further inflaming the trade war. The devaluation of the yuan adds another layer of complexity to an already volatile situation. The global economy now faces the prospect of a full-blown currency war. The trade war's tremors are felt far beyond the shores of the United States and China. Emerging markets, often reliant on exports to these economic powerhouses, find themselves caught in the crossfire. Countries like Vietnam, Bangladesh, and Mexico face the prospect of losing market share. The uncertainty surrounding the trade war leads to reduced investment and slower economic growth. The devaluation of the yuan adds further pressure on emerging markets. Some countries respond by devaluing their own currencies, risking a tit-for-tat currency war. The trade war highlights the interconnectedness of the global economy and the vulnerability of emerging markets. Amidst the trade war's turmoil, a new narrative emerges: Bitcoin as a safe haven asset. Investors turn their attention to the decentralized world of cryptocurrencies. Bitcoin's appeal lies in its unique characteristics. As a decentralized digital currency, it operates independently of central banks and governments. This independence now appears as a strength in a world grappling with trade wars and currency devaluations. Bitcoin gains recognition as a viable investment asset, attracting attention from institutional investors. While Bitcoin garners attention, its notorious volatility gives some investors pause. Enter stablecoins, a new breed of cryptocurrencies designed to minimize price fluctuations. Stablecoins achieve their price stability by pegging their value to a stable asset, typically the U.S. dollar. This stability makes them attractive to investors seeking to hedge against volatility. During the trade war, stablecoins gain traction as a way to preserve capital and facilitate cross-border transactions. Businesses turn to stablecoins as a more reliable means of payment. The rise of stablecoins underscores the evolving role of cryptocurrencies in the global financial system. A new generation of investors emerges, eager to embrace the potential of cryptocurrencies. Millennials, having come of age during the rise of the internet and the 2008 financial crisis, are no strangers to economic upheaval. For many, cryptocurrencies represent more than just an investment opportunity. They symbolize a break from the traditional financial system. They are drawn to the decentralized nature of cryptocurrencies and their potential to democratize finance. The trade war further fuels millennials' interest in cryptocurrencies. This new breed of investor is not afraid to challenge the status quo. The trade war sparks a generational shift in investment preferences, with cryptocurrencies at the forefront. Section 1. The Great Divergence. Bitcoin charts a different course. As the trade war raged on, a fascinating divergence emerged. Traditional assets swayed precariously, their values fluctuating wildly. But in the digital realm, Bitcoin was charting a different course. Bitcoin seemed almost impervious, showing signs of growth. This divergence caught the attention of investors and analysts. Could Bitcoin be emerging as a true safe haven asset? The Great Divergence marked a pivotal moment in cryptocurrency history. It challenged long-held assumptions about money and the global financial system. Section 2. A haven in the storm: why Bitcoin attracted investors. As the trade war intensified, traditional safe havens like gold and government bonds seemed less appealing. Gold was susceptible to manipulation and lacked ease of transfer. Bitcoin, decentralized and free from government control, began to shine. Investors saw Bitcoin as a hedge against instability and inflation. Its fixed supply offered protection from fiat currency devaluation. The trade war highlighted the vulnerabilities of the traditional financial system, driving investors towards Bitcoin. Section 3. Institutional interest. Wall Street starts paying attention. Wall Street began to take notice of Bitcoin. Hedge funds and asset managers showed interest. Initially cautious, they started with small investments. As Bitcoin proved resilient, interest grew. Institutions built crypto trading desks and custody solutions. This brought legitimacy and liquidity to the market. Section 4. The data speaks correlations and market trends. Bitcoin, once met with skepticism, gained credence as a safe haven asset during geopolitical uncertainties. For instance, in August 2019, Bitcoin's price surged over 10% amid currency war fears. Similarly, in May 2020, Bitcoin outperformed traditional assets during trade war escalations. Trading volumes spiked, indicating increased investor activity. Google Trends showed a surge in searches for Bitcoin as a safe haven. The data painted a compelling picture. Bitcoin was behaving like a true safe haven asset. The trade war, though disruptive and costly in the short term, may have inadvertently catalyzed a paradigm shift in the world of finance. By shaking the foundations of the traditional financial system and exposing its vulnerabilities, it forced investors to confront a fundamental question: what is money in the 21st century? For many, the answer lay in the decentralized, borderless, and censorship-resistant nature of cryptocurrencies like Bitcoin. The trade war, with its weaponization of tariffs, currencies, and access to global markets, highlighted the risks of relying on a financial system controlled by nation-states. The trade war also accelerated the adoption of blockchain technology, the underlying technology behind Bitcoin. As businesses and governments grappled with the complexities of global supply chains disrupted by tariffs and trade disputes, they began to recognize the potential of blockchain to bring transparency, efficiency, and security to international trade. The trade war's legacy in the realm of finance may well be the acceleration of a transition already underway, a shift towards a more decentralized, technology-driven financial system, where cryptocurrencies and blockchain play an increasingly important role. The trade war shook the financial world, no doubt about it. The old playbook needed a rewrite. Traditional stocks and bonds? That's so 2017. Cryptocurrencies came in flashing like a neon sign in a blackout. Diversification, that's the name of the game. Start small, do your homework. Bitcoin and Ethereum are the blue chips of the crypto world. There's a whole universe of altcoins out there. Understand the risks and never invest more than you can afford to lose. This ain't no get-rich-quick scheme. Don't be afraid to explore. The financial landscape is changing, and those who adapt fastest will reap the rewards. So, you've dipped your toes into the crypto waters with Bitcoin, maybe even dabbled in a little Ethereum. That's great. But listen up, because the crypto universe is vast, like space exploration in its early days. Beyond those big names lies a constellation of altcoins, each with its own unique properties and potential. Think of altcoins as specialized tools in a high-tech toolbox. You've got your stablecoins like Tether, pegged to the U.S. dollar for those who crave stability. Then there's the DeFi world, decentralized finance with projects like Aave and Compound, offering lending and borrowing without the need for traditional banks. And let's not forget about NFTs, non-fungible tokens. These digital assets are revolutionizing ownership of everything from digital art and collectibles to virtual real estate. It's a wild west out there, but with high risk can come high rewards. The key is to approach altcoins with a healthy dose of skepticism and a thirst for knowledge. Don't get swept up in hype. Do your due diligence, read white papers, understand the team behind the project, and most importantly, invest responsibly. The altcoin universe is full of potential, but it's also a minefield of scams and rug pulls. Section 3. Riding the crypto wave. Investing in the ecosystem. Investing in crypto goes beyond just buying and holding digital coins. Think of it like surfing. You wouldn't just paddle out without a board, right? To truly ride the crypto wave, you gotta look at the whole ecosystem, the companies building the infrastructure and services that make this whole thing tick. We're talking about cryptocurrency exchanges like Coinbase, providing the on-ramps for millions to enter the market. Then there are companies like Nvidia, making the high-powered chips essential for mining cryptocurrencies. And don't forget about payment processors like BitPay, making it possible to spend your crypto in the real world. Investing in these companies is like betting on the picks and shovels during a gold rush. They might not be as flashy as striking gold yourself, but they provide essential services that benefit from the overall growth of the industry. So diversify your crypto portfolio. Look beyond the coins themselves and consider investing in the companies building the future of finance. It's a smart way to gain exposure to this burgeoning industry without getting bogged down in the technicalities of individual cryptocurrencies. The trade war wasn't just a spat between two economic giants, it was a wake-up call. It exposed the cracks in the foundation of our global financial system, a system built for a different era. But every crisis breeds opportunity, and from the ashes of the trade war, a new vision of finance is emerging, one that's decentralized, transparent, and accessible to all. Cryptocurrencies, once dismissed as a fringe experiment, are now at the forefront of this revolution. Bitcoin, with its limited supply and independence from government control, has emerged as a digital gold for the digital age. Ethereum, with its smart contract functionality, is powering a wave of innovation in decentralized finance, offering alternatives to traditional banking and financial services. And it doesn't stop there. Stablecoins are making cross-border transactions faster, cheaper, and more efficient. NFTs are revolutionizing how we think about ownership in the digital realm. The possibilities are truly limitless. The future of finance isn't about replacing the old with the new, it's about creating a more resilient, equitable, and accessible system for everyone. And cryptocurrencies, with their ability to empower individuals, foster innovation, and transcend borders, are leading the charge. The U.S. China trade war, a clash of economic titans, sent shockwaves through the global markets. We saw firsthand how tariffs, like dominoes, toppled supply chains, rattled investor confidence, and left many scrambling for safe harbor. The traditional playbook, with its emphasis on stocks and bonds, suddenly felt as outdated as a rotary phone. But amidst the turmoil, a different story was unfolding, one written in the language of blockchain and decentralized finance. Bitcoin, often relegated to the fringes of the financial world, emerged from the shadows, its value holding steady, even climbing, while traditional markets floundered. It was a wake-up call, a stark reminder that the old rules no longer applied in a world reshaped by technology and geopolitical shifts. The trade war, in essence, served as a global stress test, exposing the vulnerabilities of a centralized financial system overly reliant on the whims of nations. It forced investors to confront a fundamental question: what is money in the 21st century? The answer, increasingly, points toward a more decentralized, technology-driven future, one where cryptocurrencies and blockchain play a central role. The financial landscape is changing, folks, and those who adapt fastest will be best positioned to thrive. Ignoring cryptocurrencies is like burying your head in the sand while a technological tsunami approaches. Now, I'm not saying to liquidate your retirement accounts and bet the farm on Bitcoin, but what I am saying is this: education is key. Take the time to understand what cryptocurrencies are, how they work, and the potential they hold. Explore the vast and evolving ecosystem, from Bitcoin and Ethereum to stablecoins, DeFi platforms, and the exciting world of NFTs. Knowledge is power, especially in the fast-paced world of finance. Don't be intimidated by the technical jargon or the volatility that often characterizes this emerging asset class. Remember, every significant innovation throughout history has been met with skepticism and uncertainty. The internet, e-commerce, even the automobile all faced their share of doubters in their early days. We're witnessing the birth of a new financial paradigm, one where control is shifting from centralized institutions to individuals. Cryptocurrencies, with their decentralized nature, transparency, and global accessibility, are at the forefront of this revolution. They offer a path to financial sovereignty, a way to participate in a system that's more equitable, open, and driven by innovation. This isn't just about making money, it's about shaping the future of finance. It's about creating a system that works for everyone, not just a select few. It's about empowering individuals, fostering entrepreneurship, and breaking down the barriers that have long excluded billions from participating in the global economy. So, what are you waiting for? Take the first step. Educate yourself, explore the possibilities, and consider how cryptocurrencies might fit into your financial future. The revolution is here, and it's being built on a foundation of decentralization, innovation, and individual empowerment.